Hello, this is Steve Malone with ComsFX. Hope you're doing well today and you're getting some good trades. In tonight's video, I want to take a quick look at the dollar yen. Later this evening during the Asian session, we are expecting to hear from the Bank of Japan regarding their interest rate announcement. No economist worldwide expects Japan to raise their interest rates. However, many economists are expecting the Bank of Japan to do an additional quantitative easing into the marketplace, also known as their asset purchase program. And then we had several rumors floating about the marketplace today as if the Bank of Japan would do quantitative easing or not. As a matter of fact, Dow Jones reported that there will be no quantitative easing, which put several traders and institutions holding yen shorts, kind of put them at ease. However, today at the London Fix, more rumors surfaced today and made the rounds that the BOJ would add an additional 10 trillion into the marketplace. Now, what do we mean by this quantitative easing? Quantitative easing is a way to weaken a country's currency. And you have to look at the reason why Japan wants to weaken their currency. The country of Japan depends heavily on exports. And when you have a weaker yen compared to other currencies in the world, it helps their export. And it brings income home. So going out there into the marketplace and weakening the yen is actually helping Japan. So if they go in to the marketplace and dump or sell into the marketplace an additional 10 trillion yen, which many are expecting, on top of the 65 trillion they've already done, there's a possibility of seeing the dollar yen rise. Now, if they don't do that, there's some expectations to see the dollar yen fall down as the yen strengthens in the marketplace. So in today's video, I want to lay some things out technically as to certain levels to expect the dollar yen to go based upon tonight's announcement and what the monetary policy members of the BOJ are going to do. Also, we have to consider the US GDP because based on what Japan does tonight and based upon what the US GDP number comes out tomorrow, that could also have an impact on the dollar yen. My thinking is if the gross domestic product tomorrow is stronger than expected, we're going to see the dollar yen rise. Weaker than expected, we're going to see the dollar yen go down. So let's take a quick moment and look at a number of things. As you look at the chart here, you can see there's a pretty strong trend line coming down going back to about March the 22nd. And we attempted to break above that earlier this week. Today we reached the lowest point that we've had recently, except going back to about April the 17th here, where the market made this push back up. So we have this descending channel on the dollar yen. And interestingly, one of the moving averages that many institutions follow is the 21-day EMA or the 21-day SMA. In my live active trade room, it is one of the moving averages that I like to follow. Typically, what I found is professional traders follow the 10-day and the 21-day, and then they follow the 50, the 100, and the 200. When the 10-day is below the 21-day, as it is in the yen, expectations are for the currency pair to continue going down. When the 10-day gets above the 21-day, then we're expecting the currency pair to rise. Well, in this case, the 21-day EMA is sitting right on top of this trend line, and there's a chance here that we get another stab up. We can see in the Traders Dynamic Index on this 4-hour chart that we really have kind of a positive sentiment line happening here. We have higher lows coming in. So we have a positive divergence potential here. We can see a double bottom here, and we can see this little, almost like a double bottom here. There is that potential for the move back up. So my thinking is right around 81.40, right in this area where the 21-day moving average is going to be a pivotal point in the marketplace. So just make note, 81.40 to 81.45 is going to be a pivotal point. Either we get a break to the upside or the yen will be contained inside this descending channel for a potential push below 80. So let me step out and take a look at the daily chart, and let's take a look at some potential levels to consider. On the daily chart, you can see that we have right where we're currently at, below that is the 80.55 level, then the 80.28 level, which was the low this week, and then we have an 80 level that goes back to this low that we had back on February the 28th. And this forms right here a potential head and shoulders. So on the daily chart, we have this potential head and shoulders, and a fall from there could see us roll back down this last moment of intervention they did back on October the 31st, which is right around 79.50. If I draw a Fibonacci retracement of this move, you can see that the 50% retracement puts us at 80, and the 618 retracement puts us back below this intervention that they did back October the 31st. Interestingly, the red lines, the dark red lines that you see here, the 80 to 80.55, the market has bounced up and down in this area over the last multiple months, back through 2011 into 2010. This is a critical area. Either we come up and we bounce off of it and we go down, or we come into this area and we bounce back up. So this is a critical area where we're at. My thinking is, if the Bank of Japan does not do the quantitative easing as expected, we're going to see the market roll down and test the 80 mark. If the GDP number for the US comes out tomorrow and is weaker than expected, worse than expected, then we're going to see it potentially fall down further and come down to 79.50 or below. However, there are a number of corporate and institutional bids sitting down here at 79.50. And on top of that, you got the BOJ sitting down here saying if we get anywhere down into this area, we're going to take action. Now, if the BOJ comes out and does the 10 trillion of quantitative easing overnight, I do expect us to challenge this trend line that we have and possibly try to peak above this 21-day EMA and work our way up. Where do we go from here to the upside? I think one of the key targets to look for is 81.80. That's this shoulder up here and the shoulder right here on this larger head and shoulder look. Okay, so those are going to be key to the upside, and above that you have buy stops resting in the marketplace right above 82. Now typically with a head and shoulders pattern, you're going to see a fall back down to the floor. The only problem with this is the floor is way down here around 76, and it's very unlikely that the BOJ is going to let this head and shoulders pattern fall all the way down. If they do allow it to fall and continue to fall, I think this is kind of the line in the sand right around 78.25. So those are my thoughts going into this upcoming interest rate announcement and the potential quantitative easing that the Bank of Japan is going to be doing. So again, if the BOJ does 5 trillion of quantitative easing or less, and the US GDP number comes out below forecast, there's a chance for the dollar yen to slide and to test the 50% retracement at 80 and possibly fall down to 79.50. If we break the 79.50, then I see there's a potential fall all the way down, possibly down to 78.25, but it's doubtful that the BOJ is going to let it go that far. On the other hand, if the BOJ comes out and does that 10 trillion expected quantitative easing, and the US GDP number comes out better than expected tomorrow, then look for a push back up to 81.80, and if it pins high, tries to break 82 with buy stops sitting above 82, then there's a potential move a bit higher as we challenge this low area right in here, that low point right there, that little range right there, which would put us right around that 82.50 area. Well, folks, this is Dean Malone with Compass FX. I hope some of this information will help you in your forthcoming trades. Y'all make it a great day. Get some good trades. We'll talk to you next time. Bye-bye.